Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, April 29th, 2022. Today's Chairman's Report was written by Jade Walle. Jade's a partner in a CPA firm and is on the board of Americans for Fair Taxation. The economy, inflation, and the fair tax. As of the end of March 2022, the U.S. Bureau of Labor Statistics notes that the Consumer Price Index rose 8.5% over the past 12 months. Now, that's the highest rate since December of 1981. Inflation hasn't been this bad in over 40 years, so a natural question would be whether or not we'd be better off in terms of mitigating the painful effects of inflation if we had the fair tax rather than the current income payroll tax system. Now, enacting the fair tax will put numerous complex variables into play within the U.S. economy. So let's examine these economic effects and then determine the expected ultimate impact that the fair tax would have on inflation. Now, one of the largest and most prominent of fair tax benefits is the reduced cost of everything we build, make, produce, and consume in the United States. Depending on the industry, the fair tax will eliminate embedded income and payroll tax costs in U.S. produced goods and services ranging from 15% to 25% or more. Now, this includes labor cost reductions. Think no more employer matching of the 7.65% FICA tax paid for each employee. Now, these significant cost decreases will be slightly more than offset when the 23% inclusive fair tax is added back into the retail prices of new goods and services. Now, people living in the country illegally, those participating in the illegal underground economy, all become taxpayers when they make retail purchases with the fair tax. Everyone pays the fair tax as they consume. Now, 20 years of comprehensive study on the fair tax's effect on the U.S. economy can be summed up by saying it will be an enormous stimulus, a shot in the arm like we've never experienced before. All key measures such as real GDP, domestic investment, capital stock, employment, real wages, consumption, and the coveted creme de la creme, disposable personal income, all increase with the fair tax. Now, there's some other factors in play as well. Now, it's safe to say that the fair tax will supercharge the economy. In addition, people will be bringing home their entire paychecks with no payroll taxes or federal withholding. Plus, all legal households will be receiving the monthly prebate to reimburse them for the tax they paid on their basic necessities. Add in the fact that there will likely be a slight increase in the cost of everything we buy, and some might worry that the fair tax will lead to an overheated economy with more inflation. Now, no one has a crystal ball, but let's inspect some of the factors at play. With the fair tax making the U.S. the world's new tax haven, capital investment in the United States should rise to unprecedented levels. This new level of capital investment will lead to more research and development, which should fuel an increase in U.S. productivity. Now, increased productivity would act to counter increasing costs, as productivity improvements lead to lower per unit costs. As our productivity increases with capital investments, our U.S. dollar gains strength on the world stage relative to other currencies. Now, a rising dollar lowers the cost of importing goods. We import more goods for less dollars. Now, this works as a natural hedge against inflation. Inflation tends to devalue a currency, meaning with inflation, the same dollar buys less than it used to. Consequently, you don't normally see a strong dollar in an inflationary environment. And also, we can't forget that the current U.S. market requires that we make purchases with after-tax dollars. Now, that means that new $60,000 Model Y Tesla you've been eyeing actually costs $85,714. Assuming a 30% effective tax rate, you'll need to earn $85,714 and pay $25,714 in taxes on that in order to have the $60,000 you need to purchase the Tesla. Now, given the massive supply chain involved with a domestically produced automobile, e.g. Tesla's California car plant, fair tax studies indicate that a U.S. automobile's cost would drop by approximately 20%. but then there'd be the new 23% inclusive fair tax added into the cost of that new Model Y. Now, diving in deeper, though, we see that we win with the fair tax, since currently we must earn $85,714 to purchase the $60,000 Tesla. With the 20% embedded tax costs removed, the new Tesla would cost only $48,000. But add in the inclusive 23% fair tax and the retail price rises to $62,340. Now, at first glance, it looks like the car would cost more under the fair tax, but here's the rest of the story. Remember, with the fair tax, we bring home our entire paycheck. Therefore, with the fair tax, we only have to earn that $62,340 in order to purchase the Tesla, compared to the $85,714 we need to earn under the income tax. So even if retail prices are slightly higher, we'll still have more purchasing power under the fair tax than under the income tax. Now, this simple example reveals that costs will not truly skyrocket under the fair tax, and practically speaking, we'll actually need to earn less to buy the same products relative to our current income payroll tax system. This stimulates the economy, but not inflation. And lastly, we can never forget that the fair tax, while not a spending bill per se, will bring unprecedented transparency into how Congress spends our U.S. Treasury receipts. There will be no more tax credits, loopholes, deductions, exemptions, or exclusions that muddy the water of what's actually spent in Washington. This will be a natural inhibitor to the runaway spending that politicians on both sides of the aisle have been engaging in for the last several decades. Now, this is relevant because, as we often hear, inflation can be thought of as too many dollars chasing too few products or services, and this has been front and center these past 2 years. Now, although not a guarantee that we won't spend ourselves into oblivion, the fair tax will elegantly guard and protect the U.S. from such policies that are the primary drivers of inflation. In conclusion, in business, the less complex and cumbersome and the more efficient and streamlined the system is, the better it will operate with less room for error, fraud, or abuse. Instinctively, we understand this truth. Therefore, we can confidently conclude that although a multitude of factors will be in play, the fair tax gives us a much stronger and realistic opportunity to avoid the painful and regressive inflation spikes that we get with the income tax. So, what can each of us do? We can write letters and make calls to our elected representatives demanding that if the government really wants to eliminate the burden of filing income tax returns, they should enact the fair tax and do away with tax returns altogether. The great 18th century Irish statesman Edmund Burke made a statement that applies in many ways. Nobody made a greater mistake than he who did nothing because he could only do a little. Take back control. Help us pass the fair tax. The IRS will be gone and we'll pay our taxes when we make purchases. We, not the ruling class and their minions in D.C., will decide how much federal tax we pay. If you have friends who don't know about the fair tax, send them to fairtax.org. Have them watch the whiteboards under how it works, and if they agree, ask them to please join us. Then, contact your members of Congress and the President and demand that Congress pass the fair tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org.